Do you have an eventual price target for HDFC Limited? HDFC Limited in last 10 years has managed to grow at a compounded return of about 20% plus. Do you think in future also it will grow at that run rate?
I would be very surprised if it manages to grow at that rate for the next 10 years. We certainly didn't expect it to grow at that rate for the last 10 years. It's certainly exceeded our expectations to the extent that we had expectations. And the fact is that we don't have price targets. Price targets are quite dangerous because you're looking at things in a very sort of binary black and white way, and the market is not black and white. The market is very, very grey indeed. So what we tend to focus on is simply the quality of a company. Is a company's quality strong? Does it have a strong corporate culture? Is it shareholder friendly? Looking at certain corporate governance issues, are there too many sort of connected party transactions? Look at the board of directors. What is the makeup of the board of directors? All of these questions that give you a very strong sense of whether the quality of a company is strong. And as long as we're able to continue to have the conviction that HDFC, in this case, that the quality of HDFC is still good, then we will continue to remain invested in the company. There may be, from time to time, a good case for top slicing, for trimming the weighting in a particular company because it just gets too expensive. But that won't change our long-term view. The only thing that would change our long-term view is if we changed our view on the quality of the company.
Do you have a price point in mind beyond which you would say HDFC Limited is a screaming buy?
No. The lower the price falls, the more of a buy it is. So we certainly, as I said before, we don't have price targets on the upside, nor do we have price targets on the downside. But yeah, as I said, the lower it goes, the more of a screaming buy it is.
What makes you bullish on ICICI Bank? Now, ICICI Bank has a large exposure to power sector. They also have a large exposure to corporate sector. And given the way how corporate India has progressed in last 2 years, NPAs is a concern. A lot of infra companies are applying for CDR. What makes you bullish on that bank?
My answer to that question, I have to go back to my answer to the previous question, which is, what is the main thing that we look at with respect to having a positive long-term view on a particular company? And to a certain extent it relates to the sector. I mentioned before we like banks as a sector, but more importantly it relates to corporate quality. And that has very little to do with some of the issues that you just mentioned with respect to the sectors that the bank is exposed to. We've met ICICI Bank countless times. We've held the company for a very long time. We have we're very comfortable with the quality of the management of that company. We're very comfortable that they're not going to go and do stupid things. We're very comfortable that they understand core business of banking, which is essentially extending a loan to someone that you think is going to pay you back. And that is something that, in the case of ICI Bank, we're very, very, very comfortable with. There's always going to be these short to medium term challenges that certain companies face, and it's possible that ICI Bank is in one of those phases, but that goes for much of the Indian market at the moment. But long term, it's all about management quality. It's all about company quality, and we retain our strong conviction in the company.
You've never owned large cap state-run banks. Do you think you'll never buy State Bank of India, Punjab National Bank, or for that matter any other PSU banks? Do you think they are not shareholder friendly?
I suppose the simple answer to that question is no, we don't. We don't own state-owned banks in China. In fact, we don't own any banks in China in our regional portfolios, in the same way that we own some of the banks, the Indian banks, in our regional funds. So we have an even more pessimistic. Well, we have a pessimistic view on banking in China, in a way that we don't have that view in the case of India. The issue with respect to state-owned banks is who are the banks being run for? Are they being run for benefit of shareholders, or are they being run for the benefit of the economy? And whether it's Chinese state-owned banks or Indian state-owned banks, we feel that they're being run more for the benefit of the economy. They're instruments through which governments in those in the respective countries operate fiscal policy. So loans are not being made on the basis of whether it's a good idea from a lending perspective. In other words, is the return on that investment going to be more than the cost of capital? But they're being made on the basis of whether it's going to boost the economy. And you can't invest in a bank if that's the basis on which it's being run.
Do you worry about your exposure to Bharti? It's a great company but a bad business to own, or at these levels you are a buyer in Bharti?
I suppose with the benefit of hindsight, Bharti is one that we might have misjudged the extent to which forces in the industry were impacting the,
so you seller in
company's
Bharti now?
Business. Not at this level, no. We think that at some point there will be this rationalization in the industry in India that is desperately needed. There will be certain things that get sorted out with respect to regulation, and that what you will end up with is a relatively small number of companies in an industry with very good growth prospects. So I think what you will end up with at some point is an industry with a very small number of players, and one where the regulatory issues are sorted out, an industry which is essentially more of a consumer-related industry than a utility. So one which is going to grow alongside consumption generally in India, and that without a doubt Bharti is going to be one of those smaller number of players. In the near term, we may see everybody in the industry impacted by, frankly, the mess that has emerged from regulatory confusion, as well as basically too many players. But that will change, and when that changes, you'll have an industry which is much more interesting from an investment perspective, and Bharti, I think, will be very, very well placed to have a very long and profitable period, perhaps looking at 10, 20 years. Not sure when that's going to start though.
What do you make of the management commentary from Infosys Technologies? That's again one of your large holdings. Do you think Infosys currently is going through a painful process of restructuring, and eventually in next 3 to 5 years it will emerge as a clear leader?
It's a little bit like Bharti in some respects, in that we certainly see Infosys as being one of the strongest, if not the strongest player in the industry, in the same way that we see Bharti as being the strongest player in its industry. In the case of both industries, they're being impacted negatively at the moment. The case of the telecoms industry, we've got these issues of competition, we've got the issues of regulation. In the case of the IT services industry, we've got the problem of a very sort of weak level of demand in key developed markets. So long-term case for investing in Infosys remains absolutely in place. The competitive advantages that IT services companies in India enjoy are still there. Technical expertise is still very strong. Wages are still very, very competitive. Even more competitive now, given what's been happening to the rupee. So we do still have a very positive view about Infosys over the long term. Yes.
Are you shopping something from the wrecked and the beaten down infra space, or it's too early to nibble anything at all from the infrastructure space?
Well, the way we try to capture the growth in infrastructure and try to capture this extraordinary need for infrastructure in India is via cement companies. Very boring companies. It's an industry where you don't make enormous amounts of money, but over the long term you can make very sort of steady returns. There will be these periods where the industry gets challenged because of government policy. There will be these periods where the industry is challenged because of overinvestment, which will cause downward pressure on prices. But if there's one thing that I think you can guarantee with respect to what's going to happen in India over the next 10 to 20 years, 10 to 50 years, is this much needed investment in infrastructure. And that's going to mean that the cement companies are good investments. But you should never expect anything too exciting from cement companies. It's a pretty dull industry.
Peter, appreciate your time and thank you for joining us.
Thank you.
That's it on this edition of Market Makers. I'm Nikunj Dalmia signing off. Thank you for watching the show.